I'm with Alan Cameron of BNP Securities Services. Alan, tell me, how is the broker-dealer and investment bank operating model changing and why?
Well, broker-dealers and investment banks are facing a bit of a crisis because the return on equity that they're providing is just not sufficient to sustain the industry. They can't really see revenues growing. For a couple of years people argued that they might, but now very few people can really predict revenue growth, particularly with Basel III coming in. So they're really looking at other ways to solve this ROE crisis. And they've looked at many things. They look at offshoring, they look at staff reductions, reductions in salaries, etc., etc. And they really end up with two things that they're focusing on. One is process simplification, and the other is utilizing capital and liquidity better.
Can you explain capital and liquidity? How do they utilize it better? Obviously capital is to the sense that they don't have to deploy it, but isn't that just a transfer?
Well, that's an interesting thing, is how could they do it better? There was a report recently by the Boston Consultancy Group, and they actually went and looked at a number of investment banks, and they concluded that today broker-dealers and the investment banks in particular measure capital and liquidity usage, but they don't actually make business decisions around it. So the first thing is to have it at the forefront of your business decision making rather than being something that's being measured after the fact. And I think you'll see that coming in, and it'll be very important they'll look at things like whether they should be clearing members themselves or whether they should appoint GCMs. If they want to access T2S, then that may have different ramifications for the liquidity. And on the settlement side, there's a number of enhanced settlement services in the world. There's correspondent clearing, there's Model B, there's similar services across Western Europe. These all allow broker-dealers to get better mileage out of capital. It's a crisis situation for many broker-dealers. They are in an industry where they put up margin when they trade on exchange, but they don't necessarily, and often don't at all, margin their clients. For many, that is a completely unsustainable business model. If the business grows or goes through peaks rather than continual growth, then they simply run out of cash. All the big broker-dealers that have failed, or almost all of them, going right the way back to Drexel's, going through Lehman's, going to MF Global, it's all often been down to a liquidity shortage at the end of the day. And there also comes in, with Basel III, there comes in liquidity ratios, both for long term and short term. So it's a key focus for this industry right now.
On that very important issue of liquidity, Alan Cameron, thank you very much indeed.